I guess it is very easy to point out that there is a large shift in asset allocation for an Indian saver stroke investor, and equities is merely benefiting because of that. You know, the SIP investor who's coming now is not really coming for investing in equities. He's really coming because he wants to rework or readjust his or her asset allocation. So for me, this really has been the most important and the most critical standout feature, that how despite ugly, nasty, poor, terrible and pathetic headlines, Indian SIP investors and Indian investors, they kept their faith going. So Sandip Sabharwal, I think that really is the most appealing or redeeming or heartening feature. Nasty headlines from financial media, yet Indian investors kept their faith.
Good morning, Nikunj. And I think that's one of the key reasons why the Indian markets held on the way they did. Because if you actually look at other emerging markets, the equity culture has been something which has been around for a very long period of time. The equity cult actually has been growing in India over the last few years only. And this year, because the investors kept the faith and the flows continued, what we saw was that the indices held on, because normally, historically, if we look at trends, the market trends were largely determined by what foreign investors do. So if foreign investors were selling, Indian markets were going down, foreign investors buying, Indian markets would go up. The other key factor, like you pointed out, was the large dominance of large caps versus mid caps. So initial part of the year, mid caps were hugely overvalued. Right now they are reasonably valued, with pockets which are reasonably undervalued. So I think that's a good opportunity for investors. And what we could see in 2019, contrary to what the general belief is, a lower volatility as compared to 2018, and a better return from broader investors, broader investments.
Sandip, hi there, good morning. Wanted to talk about the other headline. You know, RBI came out with an extensive report on Friday post-market hours, sort of summarizing the outlook for the banking sector, and they cautioned against calls for reducing the minimum regulatory capital requirement. They highlighted the overall provisioning level, that it's not enough to cover losses, and also, you know, gave us an insight into the gross bad loans that have risen to nearly 11.2% versus 9.3% last year. How are you looking at some of the key highlights as the RBI has flagged off that, you know, GNPA surge and some of the steps that would likely be taken?
I would think that it's more a historic report. It's a statement of facts as they existed in the past. So it's not future looking. So markets tend to be future looking, and most of the points I also read through it are something which everyone knows. Obviously the RBI, contrary to what the government wants, is unlikely to ease the capital norms for lending, and it shouldn't be done. So I think things will remain status quo. So we will need to focus on how the balance sheets of banks are improving with the same set of regulations. And to that extent, I think things are well in progress. So I don't think it changes the investment paradigm by any manner at all.
Okay. Sandip, Kotak Bank may be in the limelight. Now, the RBI deadline to pair Uday Kotak's stake actually ends today, but the ET this morning is reporting that the central bank may actually wait for the Bombay High Court's ruling on the case that comes up for hearing, and that's going to be on 17th Jan. So in that sense, a bit of a window extension is what they would get. But where do you think this is headed?
Yeah, it's somewhat strange, because RBI came out very strongly against it, and then the High Court also refused to stay the RBI's instructions to Kotak. So in that context, I think the deadline expires today, and if there's no communication from RBI, then the bank will be in non-compliance and could be either fined, or there could be other measures which RBI could take. So let's see how they go, because if they are going to wait till 17, they should have come out with that. So I would think that I don't know what the source of this news is. I would think it would be more speculative, but practically it was virtually impossible for Kotak to bring down the stake so much so fast. without really cracking the stock by at least 10 to 15%.
To the stock in the interim, Sandeep, because Reserve Bank of India is unlikely to budge. We know that court is not likely to go out of the way to really support Uday Kotak, and his extension is unlikely to be increased beyond a certain time frame. So for the stock, what do you think this entire episode means? Will the stock remain under pressure, or this is an opportunity for someone to really lap up Kotak Mahindra Bank, because eventually this problem will be sorted?
Yeah, eventually this problem will be sorted, but the magnitude of stock which will come into the market, which I think it should, because what they tried to do was trying to play around with regulations, and the way they want to reduce the stake, then it becomes so easy for everyone that you just issue some a particular kind of instrument, reduce your stake and just go around the regulations. I don't think it will stand judicial scrutiny. I don't think it will the RBI will budge. So to that extent, if people want to play private sector banks, I think some other banks would be better off in the near term, because whenever they are forced to come out with the sell-off by either Mr. Uday Kotak or a QIP, it should at least be at a 8 to 10% discount to the current price.
Sandeep, whom would you bet on for next year from the large cap space? If you have to, let's say, make a list of outperformers of 2019, which is one individual you think will create wealth for himself and for his shareholders?
Now, individual, like among the large caps, I would think that large caps should, like the big performers among large caps should be able to deliver maybe 15-20% this year, not more than that, because overall large cap indices I think will deliver less than the broader indices. So among the stocks, one thinks could do much better in terms of outperformance this year. I would think L&T could do well, ICICI Bank could do well in terms of that 15-20% return category. Some of the consumer names could surprise us despite the valuations which are very high. So these could be from among stocks like Britannia, Dabur, maybe Pidilite Industries. Some of them could surprise us, because I think consumption demand will be strong in 2019, contrary to whatever the news flow is going around farm distress, etc., with all the farm loan waivers plus the implementation of pay commission recommendations by many of the state governments. So I think that could be one play which could do well. So broadly these could do well. Some I think capital good companies will come up, but then they are not in the large cap category, so don't fall into that segment. So I would think broadly on the large cap side, some of these stocks could do well.
Great to have you on the show. I know we put you on a spotlight, but good to get in stock ideas from you as always.